Welcome to another deep dive edition of the Chicks on the Right podcast. Today, we are joined by Phillip Patrick from Birch Gold, who's going to help walk us through some of the more recent economic news that we all need to be thinking about. And one of the things that is on people's minds big time right now is the possible looming government shutdown that is potentially going to happen in the next couple weeks. So what is at stake with this potential shutdown this time?
There's a lot at stake, actually, particularly with the economy as precarious as it is right now. But the problem that we have, so the government's fiscal year begins October 1st, and Congress needs to pass the 2024 spending bill before then. The problem is that the Republicans already agreed to pay a $1.47 trillion budget last year, but Speaker McCarthy and Biden negotiated a $1.59 trillion budget. So what we've got is essentially a $120 billion hole, which is a big hole, right?
Yeah.
Now, they've reached, late on Sunday, they reached an agreement, the House Republicans, on another short-term stopgap spending bill. Basically, it's called a continuing resolution. And if it sounds familiar, it's because it's familiar, right? It's the same tactic that Congress have been using over and over again, essentially to stall time and to try and kick the can further down the road. But as I mentioned, the Senate already passed a $1.59 trillion version of the budget. So the pressure's really on right now. I wouldn't be surprised if we did see a shutdown over the issue, which would create uncertainty, volatility in the economy, but it may force a discussion on spending finally, which I think is really, really important.
Oh my gosh, that would be something, wouldn't it? Yeah. Forcing a discussion about spending for once. Yeah.
It's crazy, right?
Okay. So when you say a precarious economy, speaking of what I would call a sucky economy. So the Federal Reserve's Open Market Committee met this week, which I don't even know what that is. But what is your take on that and the take on their announcement that they made?
So look, the FOMC, Federal Reserve Open Market Committee, they decide whether to raise interest rates, to not raise interest rates. So they're in charge of the inflation fight. They decided to not raise the interest rates yesterday, on Wednesday. It's good for us, right? Particularly if you've got a credit card. But look, for the inflation fight, it doesn't bode well. Inflation, the last inflation numbers that came out, inflation was on the rise again, which is causing a problem, right? And we'd seen recently headline inflation coming down, but it was being driven predominantly by oil prices, by energy prices. They'd gone up so much, they started to come down. They're now on the rise again, which is driving headline inflation up. So the Fed had a decision. If they really wanted to try and combat inflation, they would have had to raise the interest rates. But the problem in the economy right now is that credit growth is constrained. So when they raise the interest rate, it raises the risk of financial instability. We saw 6 months ago, they raised the rates to try and combat inflation, and look what happened to the banks, right? So I think right now they're picking stability with the banks over the inflation fight, which it's good short term, right? Interest rates are a little bit lower, but it means that prices will be higher for longer, and I think it extends out the inflation fight. So they're stuck between a rock and a hard place.
So, and inflation, of course, is what is causing some of the flight from the American dollar. And we've been talking about that quite a bit over the last couple of weeks, about BRICS, about how all of that is impacting everything. What can you tell us about that right now?
Yeah, it's. I'm glad you've been talking about it a lot. It's a big deal. The world right now is distancing from the US dollar, and it's driven partly from domestic policy, the inflation, which is making the dollar less attractive for other nations to hold. The other side of things is weaponization, right? We've been using the dollar as a stick. We've been acting as the world's policeman, and countries like Russia and China are starting to realize, look, if we want to do what we want to do, we've got to end the dominance of the dollar. So the BRICS currency, the BRICS alliance is picking up. The two new BRICS members, Saudi Arabia and the UAE, are already now starting to settle oil trades in their own currency, so away from the dollar. That's breaking a sacrosanct agreement between Nixon and the Saudis that Saudi oil would only ever be traded in dollars. So that's broken now. And it's a big concern, right? These nations are no longer a joke. They have a GDP larger than the G7, right? They're bigger than the West now. If they start trading outside of the dollar, global demand for the dollar starts to wane. Purchasing power comes down, value comes down. So I think it's a case of watch this space. As it picks up traction, it could be problematic for our dollar.
Okay, so like everything is really depressing. Okay, so we're looking at.
I realized that.
I'm gonna need to start drinking in like 2 seconds. Okay, so we're looking at a government deadlock. All right, a Fed that just can't seem to like get its act together when it comes to inflation, and then a world that's turning away from the dollar, kind of like what you're saying. So if the rest of the world is de-dollarizing, does that mean that we need to do that? Like, should we be doing that too?
Look, I first of all, I'm sorry to be the bearer of bad news. I might start drinking as well. I do this all day.
The messenger. We will not do that. No.
All right, thank you. Look, the answer is yes, right? On a level, yes. So the world is moving away from the dollar, right? 2022 central government holdings of dollars was at 25-year lows for the reasons that we mentioned, and what they've been doing in response is buying gold. Last year, the single biggest year for gold buying by central governments in history. Now, the reason that they do that, when you're worried about currency decline, you buy gold. And the reason for that is that gold and the dollar have an inverse relationship. So when the dollar goes down, gold goes up. So it's the best way to hedge. Now, countries hold dollars, but we as individuals hold dollars as well. So what applies to central governments applies to us, of course, on a smaller scale. So I think everybody just needs to think about how they can hedge some of their exposure to dollars or dollar-denominated assets. Precious metals work really, really well for that. And
Okay.
So can you just talk for our audience? Can you talk, because we talk about Birch Gold all the time and what a great education Birch Gold gives people who text the word chicks to 989898. They get this free information kit. They get all this education with no obligation. But if somebody gets that information kit and they are like, yes, I want to do this, can you walk through for our audience what happens if they pick up the phone, if they send an email or whatever? What does the process look like for them?
Of course. So as you mentioned, it starts with information. We have, for your viewers, for your listeners, we have a free information kit, which will guide them through all of the basics. Now, they read that and they think, hey, this makes sense. They can give us a call. There are many people like myself at Birch that are there to guide people through, hold your hand, and we can help people ultimately either roll over any portion of an existing IRA or eligible 401k, and we can help to put any portion of that into physical metals, as well as those that are sitting out there with cash in the bank that's losing to inflation. We can put physical metals in their hands as well. So we help to facilitate physical metals as part of a portfolio. Education is key to us. So like I said, starts with a guide, but you got people like myself that are there to tailor make and walk people through the process.
That's fantastic, because so many people just do not understand how to do that. And so you guys are a great resource for that.
For sure. Mm-hmm. Phillip Patrick of Birch Gold, we appreciate your time today, giving us the update. It's not necessarily great news, but at least it gives people the information they need to make good decisions.
And
so
you're delightful.
You being here.
You're totally delightful. So thank you for joining us.
You guys are very kind. You've cheered me up already. Thank you, guys.
Thank you so much.
Thank you.
Cheers.